2019 Unit 1 IAL question number 6 part B. Prepare the statement of financial position of the partnership on 1st May 2018. So this was a partnership between Abel and Baker. In the first part we had prepared capital account. Now part B of the question requires preparation of statement of financial position for the partnership. Format is asset, capitals and liability, and we can see that there is non-current assets at carrying value. It is 14,000 plus 18,000 for Baker. So there are two people, so we will write the combined financial statement in the partnership. So 14,000 plus 18,000, that is 32,000 pounds. Now next let's write the current assets. Now the current assets are inventory, trade receivables and bank. Okay. Goodwill has been removed, so it is not a part of the asset. So now trade receivables. Now bank we have to prepare because there has been adjustments, and we will see whether it is a asset or a liability. Okay, so let's prepare the bank account. Okay, so debit side is in, okay, money coming into the bank, and credit side is money going out of the bank. So the balance BD at the beginning, okay, 8,000 is on the credit side, and on the debit side it was 3,000, okay, for Baker. So we will prepare the combined bank account of this partnership. So you put 8,000 on the credit side and 3,000 on the debit side. Then there was Baker who took out 4,000 by check. So money went out of the bank, so that is going to be appearing on the credit side, and let's write this, and this was reflected in the capital account. Okay, so the double entry was capital account. Now let's balance it and see what is the bank balance at the end. So you add up the total on both the sides. So 8,000 plus 4,000, it is going to be equal to 12,000 on the credit side, and it is higher than, we can see the balance on the debit side, which is 3,000. So the difference 19,000 minus 3,000, that is 9,000, will become the balance carried down. So to make the total the same, so 9,000, okay, and now the balance carried down will become the balance BD in the on the credit side, okay, and it will be the same as the last balance carried down, okay, 9,000. So this reflects overdraft. Okay, it's a liability. So the overall, when they did a partnership, this bank has become a current liability. So we will not include it under the current asset section. So we'll be including only inventory and trade receivables. Now let's add up the inventory. It is 9,500 and plus 30,000 pounds. So that is going to be equal to 22,500. Let's prepare the trade receivables. It is 4,500 plus 11,500. So the total value is going to be equal to 16,000 pounds. Now let's add up the total current. So that is going to be equal to 38,500. 22,500 plus 16,000 is 38,500. Now let's add up the total asset value. 32,000 for non-current asset, and current asset is 38,500. So that is going to be equal to 7,500. So the total asset has to be now equal to balanced, must be equal to capital plus liability. Then your financial statement of financial position is said to be correct. Now the capital, from the capital account which we had prepared, let's write the balances at the ending. So for Abel it was 16,000 and for Baker it was 23,000 pounds. So let's write, this was already prepared in the part A of the question. So the balance brought down at the ending was 16,000 for Abel and 23,000 for Baker, 39,000. Abel had given 5,000 from his capital and has turned into a 10% loan. So let's write that. So 10% loan is a non-current liability from Abel and it was equal to 5,000 pounds. Now let's write all the current liabilities. So the current liabilities, we know it was bank and trade payables. So let's write both of them. So first one is the trade payables and bank. Okay, let's write these two. So the trade payables is 7,000 plus 10,500. So the total value is 17,500. So that was for the trade payables, and for the bank we had already prepared the account to get the balance. It was an overdraft which becomes a current liability. So it was 9,000. So 17,500 plus 9,000, that is going to be equal to 26,500. So now let's add up the capital plus the total liability, which includes non-current and current liability. So 39,000 plus 5,000 plus 26,500. So that value is going to be equal to 70,500. So so let me write here, and this is the same as the current the total assets. So your balance sheet is balanced and is correct.